Well, welcome everybody to our Friday video, the Genus Friday video. It's May the 8th. It's our 8th week doing this, and I'm hoping that pretty soon you guys will be too busy on a Friday night to be looking at this. Hopefully Dr. Henry's got us moving in the right direction. But we're here today, and this week, Wayne, I just think has been a fascinating week. One of the reasons I love working in this industry is it's so interesting. So this week, the VIX, which we talked about last week, which is a measure of volatility and really risk, which peaked at 80 in the mid-March, went from 40 this week to close at 27. So a ton of risk came out of the market this week. And the market went up this week. It went up back to 2,900, so where it bounced off the lows. So, but there's a lot of bad news out there. What's going on?
Well, number one, the stock market is an information discount machine. So it discounts information 6 to 9 months in advance. So it's seen the inflection point in the economic side and the virus, and it's moving on. Number one. Number two, there's been, there's so much money printed. The money supply is up 25% year over year. The government's throwing in money. But at the end of the day, we're talking about 6 or 7. I even forget count now, the trillions of dollars that you're going to spend over the next little while. And people are starting to go back to work. So we're getting a bit of an inflection point. And, we're seeing people going back to work. And there's one of the things our team members did today was look at who were the winners of this whole COVID-19 pandemic. Well, can you think of a better scenario for technology than what just happened? You can't. It's basically, we're seeing an acceleration of technology here at warp speed, going to a place where we were supposed to be probably 5 years from now. So big winners in technology. Oh, gee, yeah, and healthcare. Were they a big winner? They were a big winner. Oh, communication services, telecom. Everybody's using Zoom and every other computer, upgrading their internet speeds. Another winner. Consumer staples, were they a winner? Everybody's buying bleach and storing things in their homes. So there were big winners. That was the thing that really got me in this whole discussion over the pandemic was it was different. There were winners and then big losers, obviously, and tragedy as well out there. I don't want to cover that up. But if you look at the winners, they're about 60% of the U.S. stock market that have actually, if COVID stopped tomorrow, would start losing. It wouldn't be as good an environment for them. And if you start adding up, where all the jobs were lost, in hotels, in restaurants, and Carnival cruises, that's about 5% of the overall market cap of the U.S. So I'm listening here today, CNBC, and they're kicking up the jams on how bad things are in the hotel, and the market's going up. And it's because the market capitalization is very small for that segment. It's a big impact. Now, there's going to be some follow from that, obviously, which impact the market, and that's on the financial side. To me, that is the linchpin. That is the crucial part of the whole market, and we have to watch that. But there's sectors doing very well. There's a majority of the U.S. market, and in Canada, the story's not as good. In Canada, the sectors that are winning are about 20% of the overall market because we're a resource-based economy, and our banks are so big here. Our banks are still 30% of the overall market. So that doesn't bode well on a relative performance for Canada versus the US.
Right. So I'll bring clients up to date on their positioning. So we're fully weighted in stocks. Whatever your benchmark is, you're probably right on that. Yeah. And that isn't hugely aggressive given Wayne's enthusiasm for the big
there's still things to be concerned about here. I'm trying to justify where we are today.
Right.
So let's not look at Main Street and the problems behind us, but what the market is looking forward at and who are the winners in this space.
Right. And truly nobody knows what's going to happen. The analysts aren't even giving guidance for what earnings will be next year on the majority of stocks in the S&P 500. We don't know if there'll be food disruption. We don't know so many things. So my point is, if the market does go down from here, and we see lots of justification for why it is here, but if it does go down, we have cash in people's portfolios to buy, and we'll be buyers. So just don't want Wayne's enthusiasm to make you think that we're being really aggressive. We're just back to where your policies are. So thanks for that, Wayne. That's great. My my second question is really a geopolitical question. It's probably not a fair question, but I'm so curious about the answer, and there isn't really an answer. But anyways, it's about China and the US and how they have for a couple of decades now had this nervous but stable symbiotic relationship that helped both of them drive their economies. And really this stopped maybe a year ago or 2 years ago when the tariffs came to light and the unfair trade practices came to light. Then Huawei kind of came to light, and even Zoom, the servers are in China. The Claws of the Panther, great book you got to read if you haven't read. And then of course the flu, the virus starting in China, and was there a cover up or not, and the road across the world, blah blah blah. Anyways, the point is the cat's out of the bag. The Communist Party in China is revealing itself to be much more aggressive than they've revealed themselves over the last couple of decades. And so, and the mood around the rest of the world is to wake up. And the detention camps, so on, I missed that one. Anyways, what Wayne, do you think is the outcome of the new reality? Because we can't have a nuclear war, we all die. So how do they fight each other in a new Cold War? What does it mean for our investments?
Well, I think there will be a Cold War longer term. I don't know how it's going to shake out, but it could be just major economic war. But I think for number one, the developed countries have to develop have to diversify their supply chain, which is a big problem. We saw the problem with getting masks and everything else. Even testing was an issue. Having to get supplies from China. I think in the near term, I think they're both going to play nice. And I think Trump wants to get elected, so he can't bash China too much. He has to just lay low. And also we need supplies from we need the PPEs from China right now. But I think longer term, the rest of the world and the US and the rest of the world are waking up in terms of what's happened in terms of how the pandemic broke out of China. There was definitely cover up going on there in terms of, letting people in to investigate it. So it's going to be a long term. It's going to be a Cold War, and I don't know if it'll break out in military, but I think we probably have cover till the election time, and we'll see what happens from there. But I think we're good till election at this point in time.
So does that from an investment standpoint, does that again justify a higher weight outside of Canada given our lack of industrial output, or does that?
Well, it seems like with the pandemic, we're getting back to regional sort of competition, a regional basis for the economy. And there's even talk of people leaving city, going to smaller cities and things like this. So it's going to probably be a bit of a drag on global trade, based on just projecting what's happening with China. There'll be maybe a US sphere, which will be North America, Canada, Mexico. So we'll be stuck more in that. Canada's going to try and play both Mexico and China as best it can here, but it's going to probably have to choose at one point in time. And the US is the obvious choice, given the proximity. And Europe, who knows what's going to happen there, how that'll break out. But it's going to mean a more regional, a more broken up world, I think, and we've seen the peak in globalization. So it's going to be probably higher cost, longer term. But there's technology coming. There's robots are coming. There's printing technology coming that might be able to do these things all at your own home. So I think technology is aiding more of a separate society and separate culture. And those are some of the things too we should be talking about too, just in terms of this threat between the US and China, are the big cultural changes that are going to take place because of the event in terms of government spending. Will there be a push to more socialism? What's going to happen with the equality of income, example. So it's going to have cultural and economic and shifts and implications for a long term.
Yeah, you're actually wandering into my third and final question, which is, again, something that started before the virus, but the virus has accelerated, and that is the wage gap and the wealth gap, and how this is horrific for making that gap wider. I mean, there's only so long these governments can pay for rent and food for all these unemployed. The unemployment this week in the United States, 20 million people unemployed this week, 15% unemployment in the US. That's a lot of people. And so the gap, people in the stock market, they're down, 5% year to date. So again, you've got winners and losers, not just companies, but people. And I know there's not an answer, but I worry about the election and just social unrest.
Well, they say we're all just, from 12 days of anarchy if this food supply gets cut off. And that's why keeping the meat plants and everything else open is really important for the safety of society. And so, yes, this could really spin out of control very easily. But the thing is, looking forward, jobs will start coming back rather dramatically over the next quarter or two. They're not going to all come back, I don't think. I think at the end of the day, we'll probably be sitting here. I think we're at 3.5 in the US pre-pandemic. We'll probably be somewhere around 7 or 8, in the new year next year sometime. And some of those jobs won't come back, and some of the hotel business or restaurant business. But you know what? Things are changing. We're shifting. We're seeing business, the creativity of entrepreneurs shift so dramatically through the course of this whole pandemic. And there'll be new opportunities, I think, and an acceleration to the digital economy. And so we just need more and more of that. And I think that'll help keep us going longer term. It's kind of just like warp speed into the digital economy where we'd be 5 years from now.
Yeah. Good. Well, I think that's enough for 1 week. I think the most important thing is that Sunday is Mother's Day. Exactly. And it's a great, great reason to play a little guilt trip on your family, to get into their bubble and say, Dr. Henry approves. And I recommend that. And
and happy Mother's Day to all the mothers out there.
Sorry, Wayne?
Happy Mother's Day to all the mothers out there.
Yes. Anyways, and we'll see you next Friday. Call your portfolio managers with any questions. Thank you.